Today's session on QQQ was an absolute masterclass in why you cannot be a reactive trader. If you look at the chart right at the open, everything looked absolutely primed for an immediate long breakout. But within minutes, the market pulled the rug, flipped into a complete nosedive, and trapped thousands of retail buyers who tried to chase the initial momentum. In this video, I'm going to show you the exact moment of this trap, how I avoided getting chopped up on the wrong side of the move, and the specific indicator shift reclaiming the 100 EMA that gave me the green light to take a textbook 2-to-1 break and retest setup to the upside. If your biggest struggle right now is getting shaken out early or forcing trades before they validate, grab a notepad, let's look at the charts. My bias coming into today was inherently leaning toward the long side. The initial open showed an aggressive break. Visually, it looked like the breakout we wanted. But notice what happened next. Instead of a clean, controlled consolidation above that level, the price flipped into its head. A violent nosedive flushed the market straight down, slicing right through the minor support and threatening to change the entire daily narrative. Now, old me or an undisciplined trader will do one or two things here. Either they panic buy the dip, thinking it's too cheap to pass up, or they completely flip the bias into an emotional short, trying to chase the crash. I did neither. Why? Because my rules dictate that the open drive reversal needs a structural floor before an edge presents itself. I sat on my hands and watched the market flush. This is where patience pays off. Let's take a look at the overall NASDAQ on a 15-minute chart. Notice the response. The market didn't stay down. It put in a firm bottom and the buyers started stepping up aggressively. Back on the 5-minute chart, I was waiting for one crucial mechanical trigger, reclaiming the 100 EMA. When the market nosedives that hard, the 100 EMA acts as a heavy dynamic resistance. If the buyers can't reclaim it, any bounce is just a dead cat bounce. But look right here, the price didn't just touch it, it forcefully surged back above the 100 EMA, confirming that institutional demand was shifting into our momentum and putting the odds back in our favor. Once the 100 EMA firmly reclaimed, the macro long thesis was officially back on the table. Now we look for the exact entry structure. We got a clean break past the local morning resistance, followed by a textbook break and retest. I waited for my specific signal candle to close to validate the bounce. The moment it triggered, my position was live. My risk parameters are completely fixed, 1% on every trade, risk. I mapped out my stop loss safely below the retest structure, which gave me an exact roadmap to my target. In a market with this much velocity, you can't be greedy, but you can't be fearful either. You let the trade breathe. We were targeted for a strict 2-to-1 risk to reward outcome as planned. As you can see, the market fanned out beautifully. The EMAs aligned sequentially, acting as a staircase all the way up to our target zone. The takeaway from today isn't that this was a magic trade. The takeaway is that your trading plan has to be stronger than market volatility. If I had jumped into this nosedive early, I would have taken an unnecessary loss. If I hadn't waited for the 100 EMA confirmation, I would have been gambling on a blind bounce. Real trading, it's boring. It's sitting there watching the market move without you until it lands perfectly into your box. If you got on the wrong side of the QQQ move today, don't beat yourself up. Just audit your patience. Drop a comment below. Let me know how you handled this morning's trap. And make sure to subscribe for raw, zero BS price action analysis. I'll see you guys in the next session.